At this precise moment, Strive Inc., NASDAQ ASST, is trading live at $0.90, representing a sharp intraday decline of roughly 7.79%. The stock has broken below the psychological $1 support level, currently hovering in a precarious zone that separates deep value from a potential freefall. If you are watching the ticker right now, you are seeing red candles dominate the 5-minute chart, with volatility spiking as volume pours in to test these lower bounds. The market capitalization sits at approximately $731 million, a figure that seems to be shifting by the minute as traders digest the latest movements. But stop looking at the red percentage for a second. If you think this is just another microcap tech stock flushing down the drain, you are missing the single most important financial pivot of late 2025. The expectation from the casual observer, seeing a sub-dollar stock down nearly 8%, is that this is a failing business, likely the old asset entities struggling to monetize Discord servers. That is the expectation. The reality is radically different. What you are actually looking at is a mispriced, highly volatile, and controversial attempt to build a new Bitcoin treasury giant backed by one of the most polarizing figures in American finance, Vivek Ramaswamy. The drop you see today isn't necessarily a sign of business failure. It is a violent repricing of risk as the market tries to figure out if this company is the next MicroStrategy or a dilution machine. To understand why this stock is trading at $0.90 today, we have to strip away the old identity of this ticker. For years, ASST stood for Asset Entities Inc., a company focused on digital marketing, Discord community management, and TikTok content delivery. That boring, low-margin business model is effectively history. Through a reverse merger transaction completed recently, this ticker has been commandeered by Strive Enterprises, a firm with a mandate that has nothing to do with managing chat rooms and everything to do with hard money. They have pivoted the entire corporate structure to become a Bitcoin accumulation vehicle. The violent sell-off we are seeing today, this 7.79% drop, is likely a reaction to the friction of this transition, specifically the fears surrounding their capital-raising strategies to buy that Bitcoin. The market narrative right now is a tug-of-war. On the bearish side, you have investors terrified of dilution. To buy Bitcoin, Strive has to raise cash. They recently closed an offering for their SATA Series A preferred stock. Whenever a small-cap company issues new equity or complex preferred shares, the common stock, ASST, often takes a hit as arbitrageurs and short sellers pile in, betting that the influx of new securities will weigh down the price. That is exactly what we are seeing today, a sell-the-news reaction to their aggressive financing. But here's the contrarian take that the bears might be ignoring. Strive is not burning this cash on operational expenses or CEO bonuses. They are converting it directly into a bearer asset, Bitcoin. Let's look at the numbers that matter. Recent filings indicate that Strive has accumulated approximately 7,525 Bitcoin. At current market rates, that is a massive treasury for a company of this size. The drop to $0.90 pushes the company's market cap closer to, or potentially even below, the net asset value of the Bitcoin they hold, depending on where Bitcoin itself is trading at this second. This creates a fascinating discount to NAV setup. If the stock falls too far, you are essentially buying Bitcoin at a discount, provided you trust the management not to squander the keys. This tension between the fear of dilution and the tangible value of the Bitcoin on the balance sheet is what is driving this chaotic price action. Before we go further, I want to hear from you. Comment below, do you trust the MicroStrategy playbook of borrowing money to buy Bitcoin, or do you think it's a ticking time bomb for companies like Strive? Now we need to address the elephant in the room, the short interest. This is where the story gets explosive. According to the latest data from Fintel and NASDAQ, the short interest in ASST is hovering around a staggering 38% of the float. This is an incredibly high figure. It means that nearly 4 out of every 10 shares available for trading have been sold short by someone betting the price will go lower. This isn't just hedging, this is a crowded, aggressive bearish bet.
When short interest gets this high, the stock becomes a coiled spring. If Bitcoin rallies, or if Strive announces a new accumulation milestone, those shorts are trapped. They would have to buy back shares to close their positions, and with the price at $0.90, even a small catalyst could trigger a violent move upward as they rush for the exits. You also need to monitor the borrow fee rate. For a stock like ASST, borrowing shares to short is not cheap. If you see the cost to borrow spike, sometimes exceeding 50 or 100% APR, it indicates that the supply of shares is drying up. This increases the pressure on short sellers. If you are long this stock or thinking about it, you want to see that borrow rate climb, as it makes it expensive for the bears to hold their positions overnight. Let's shift gears to the Vivek factor. Vivek Ramaswamy's involvement is not just a footnote, it is a driver of retail sentiment. Love him or hate him, he attracts attention. His firm, Strive Asset Management, was originally founded to push back against ESG, promoting a shareholder primacy model. By merging with asset entities and pivoting to Bitcoin, he is effectively betting that Bitcoin is the ultimate anti-ESG asset. This brings a political and ideological layer to the stock. You will see discussions on X, formerly Twitter, and Reddit, where the investment thesis isn't just about math. It's about supporting a worldview. This can make the stock trade differently than a standard financial asset, as it gains a cult stock following similar to what we've seen with other personality-driven equities. However, we must look at the technicals. The stock is currently trading below its 50-day and 200-day moving averages, a classic bearish signal. The drop to $0.90 is testing recent support levels. If it breaks decisively below 0.85 or 0.80, it could trigger stop-loss orders from retail traders who bought in higher, accelerating the decline. On the other hand, the first major resistance is likely back at the $1 mark. Psychologically, penny stocks struggle to regain the $1 level once lost, as it becomes a mental barrier for traders. To turn bullish, ASST needs to reclaim $1 and hold it with significant volume. Volume today is notable. We are seeing elevated turnover, suggesting a battle between high-frequency trading algorithms and retail capitulation. When a stock drops 7 to 8% on high volume, it usually means a liquidity event. Shares are moving from weak hands, panic sellers, to strong hands, institutional or conviction buyers, or vice versa. In this case, given the short interest, it's possible that some shorts are using this drop to cover and lock in profits, while new shorts are entering, keeping the pressure on. Let's talk about the SATA preferred stock for a moment, because this is confusing many retail investors. Strive didn't just sell more ASST shares. They created a new class of stock, the Series A Preferred, ticker SAT, which trades separately. This preferred stock pays a dividend and has a liquidation preference. The existence of SATA creates a complex capital structure. Common shareholders, ASST holders, are now junior to these preferred holders. If the company goes bust, SATA gets paid first. If the company makes massive profits, SATA gets their 12% dividend, and ASST gets the rest. This structure leverages the upside for ASS holders. If Bitcoin goes to the moon, the fixed dividend to SATA holders becomes negligible, and ASST common stock soars. But if Bitcoin stagnates, the 12% dividend liability could bleed the company dry, hurting the common stock. This is high-stakes financial engineering. What about the legacy business? Does anyone care about the Discord servers anymore? Surprisingly, yes. The legacy asset entities business provides something that MicroStrategy didn't have when it started buying Bitcoin: a digital native marketing engine. While the revenue from Discord and TikTok services is tiny compared to the Bitcoin holdings, it offers a platform for community building. Strive can use these channels to educate a new generation of investors about their Bitcoin thesis, effectively creating their own marketing funnel. It's a synergy that is often overlooked. They aren't just buying Bitcoin, they are buying an audience. Looking at the broader sector, we have to contextualize ASST with the Bitcoin proxy trade. It is competing for capital against giants like MicroStrategy, MSTR, and miners like Marathon, MARA, or Riot, Riot. Why would an investor buy ASST instead of MSTR? The argument is leverage on the leverage. Because ASST is smaller, microcap, the potential multiple on a rally is higher. A 10% move in Bitcoin might move MSTR 15%, but it could move a penny stock like ASST 30 or 40% due to the lower liquidity and higher volatility. Of course, this works in reverse, as we are seeing today. A flat or slightly down day for Bitcoin can translate into a nearly 8% wipeout for ASST. So, what is the actionable insight here? If you are a trader looking at this chart, you are seeing a falling knife. Catching it at $0.90 is risky. A safer entry strategy for the bulls might be to wait for a consolidation period, a few days where the price moves sideways and volume dries up, indicating that the selling pressure is exhausted. Watch for a higher low on the hourly chart. Conversely, if you are bearish,